I'm Ellis Martin. Join me now for a conversation with Adam Smith, co-founder and vice president of business development for Oroco Resource Corp, a public mineral exploration company trading on the TSX Venture Exchange under the symbol OCO, and in the U.S. on the OTCQB market under the symbol ORRCF. Oroco is focused on the development of a large copper deposit in the Santo Tomas project in coastal northwest Mexico. Santo Tomas hosts a multi-billion-pound copper resource defined by historical drilling and currently being confirmed by ongoing exploration drilling by Oroco. Copper mineralization at Santo Tomas is located at surface and therefore potentially amenable to low-cost mining methods. It's very well located with respect to the infrastructure that's essential to a large mining operation, and Mexico is among the world's top mining jurisdictions, with laws and trade agreements that protect the rights of mining companies. Since commencing exploration and resource definition at Santo Tomas 3 years ago, Oroco has made a series of rapid advances, and the year ahead is rich with catalysts, such as a formal resource definition and economic evaluation, each of which carries the possibility of a company valuation re-rating. These milestones will be achieved against the backdrop of a positive forecast for the price of copper, possibly to historical highs, as a result of dramatic shifts in metal's importance to industrial and consumer markets. Hey, Adam, thanks for joining me today. Appreciate it.
Good morning, Ellis. Good to see your face on this rainy, gray day in October in Vancouver.
Just before I threw the record switch, you were talking about the connection that you really have with your shareholders, your audience, and our audience. Feel free to elaborate on that.
Correct. Yeah. Oroco has an unusually close relationship with its investors. We've raised all of our money, all of the capital, 60 million Canadian that we've raised in the last 3 years, has come directly from investors to us with a relationship directly with us. We've done entirely non-brokered financings. So we have the advantage of direct communication and direct relationships with our investors. And that's served the company very well. It's allowed it to raise money in difficult markets, and it will continue to do so. So it's no secret right now, markets are very bad. Capital for junior explorers is limited and drying up. But I think the advantage that Oroco has, we have a unique group of shareholders, we have direct connection with them, and we have a relationship with them. We educated people on the copper market, junior mining, and the development stages of a company like ours. And so we have a great many people who understand what we're doing and appreciate the milestone we achieved this week with the announcement of a preliminary economic assessment for Santo Tomas, the Santo Tomas Copper Project in Sinaloa, Mexico. We announced a $2.3 billion pre-tax NPV, life of mine, 20-year life of mine with production at the current price at $3.85 copper, actually a little higher than current price, but at $3.85 copper, Santo Tomas will produce $20.55 billion of revenue over 2 decades, $1 billion a year with C1 cash cost of production of $1.66 versus the current $3.60 copper price. So very good margins, even today at what is considered somewhat depressed copper prices, and certainly terrific margins as we see the forecast step change in copper prices take place. So yeah, I'm really looking forward to getting out over the next month and speaking to our shareholders, explaining to them the significance of this PEA and the figures contained in it.
That's certainly what you do as long as I've known you, is you get out and you tell a story and you do it very well, and you're very passionate about the company. You always have been as long as I've known you, which dates back to 2006, I believe, 17 years ago. And, you know, if you liked the stock when you were over $2, and a lot of people did, a lot of people like the stock, who definitely are going to like it now where it's at, what is it, Adam?
66 cents. Market cap is just under 150 million Canadian.
65 cents. That's Canadian, right? The US is a little bit, probably around 45, 50, somewhere in that area, right?
Yeah, high 40s. Yeah.
So if you liked it then, a couple of years ago when it was over $2, why wouldn't you consider it now? We're not telling you to buy the stock. Adam can't do it. I can't do it. We're both heavily biased. You're a sponsor of this program, which means you've paid for the exposure. On the other hand, Cantor Fitzgerald is recommending a buy. They can do that.
Cantor Fitzgerald and a boutique firm out of Toronto, Holdco Markets, both followed our news release of the preliminary economic assessment results with their own research. Both of them had initiated coverage prior to that with a target price. And based on our news this week, they increased their target share price. So yeah, if you liked it at any price in the past, higher than it is today, that was based on an understanding that the drill program and ultimately an economic assessment would recreate the historical work and go beyond it and create the kind of net asset value that we just announced earlier this week. So we've hit our marks. We've executed the drill program. We've executed the engineering. The economic assessment came in with numbers largely in line with what was expected. 20 billion of revenue plus 9 billion of free cash flow life of mine, very modest upfront capex of 1.35 billion. So we've shown this project has very low capital intensity. As Cantor pointed out, in a world where copper mines generally cost $30,000 of capex per ton of producible copper per year, we're coming in at just a little over half of that. Big copper mines generally cost 2, 3, 4, 5+ billion to put into production. We've got 1.35 of upfront capital. So we've demonstrated this to be a project which is well situated. There's going to be capex and opex advantages because of its location in the middle of all the infrastructure needed for a project like this. Mineralization outcrops. The strip ratio, the waste to ore ratio is 1.16 to 1, which is relatively low. We demonstrated in this PEA that this is the project that has advantages because of its location vis-a-vis infrastructure, because of the way the ore bodies sit in a ridge and an elevated ridge. And the numbers, to use a tech industry term, with this NAV, with this present value of future cash flows, this is a unicorn. It's a unicorn in terms of its NAV, if not market cap. And that's the other thing that Cantor Fitzgerald pointed out was the junior miners right now are generally those with studies like this, those relatively few projects advanced like this, are trading well below their NAV, and Oroco is trading at a greater discount even than its peers. So if you believe that in the future, as copper prices start to rise, as the investment community starts to focus on copper again, these assets will rise to some price that represents a higher percentage of NAV or even rise to NAV, then there's an opportunity here. We're trading at far below 10% NAV. Cantor Fitzgerald and others believe that these types of assets get bought at 0.6, 0.5 of NAV. So there's a great increase there. The other thing I'll point out about the study and about the NAV and the NPV and the future cash flow, et cetera, is this is the result of a first phase of exploration. We did 49,000 meters of drilling, which is an impressive amount, but it's by no means complete when you're talking about an ore body mineralization as extensive as we have at Santo Tomas. So we completed a phase 1 exploration program in order to meet minimum thresholds to come up with the kind of numbers that could be put into a mine plan. Phase 2 is going to take that exploration and take it closer to completion. In our news release, we listed 11 items which we'll be working on to improve the opportunity at Santo Tomas. And some of those have the potential to dramatically improve the numbers still. So this PEA is not exhaustive of the potential of Santo Tomas. It was simply a study based on a minimum threshold of drilling. So there's still lots on the table. We've outlined those things that we'll be focusing on to improve this project in the news release. When the full PEA study is released, companies have 45 days from the announcement of the key findings to publish those studies. There will be a lot of detail in there as to the future exploration program and how to move forward and how to advance and improve this project.
How are you going to pay for phase 2? I think that's a fair question.
Well, I think earlier on we touched on that. Obviously, the company will be needing to raise capital. We've got with this study baseline value with which to attract additional investors, and we have got a very good database and contact list of investors, some of whom own stock, some of whom are shareholders, and some of whom are not yet shareholders, some of whom may never be shareholders, but some of whom are not yet. There's a great many sophisticated investors in the commodity sector who simply can't invest until certain milestones are achieved, whether it's the announcement of a mineral resource estimate or preliminary economic assessment or further economic studies. As you rise up the food chain and you get bigger and more conservative investors, they bring more and more money. And a PEA is one of those studies that's a threshold for a great many of them and allows them to invest in a company like us. So we will be seeking an equity raise from that group and those people who recognize the value of the study and the numbers contained in it. We've got a pretty good market cap right now, as I mentioned, 150 million Canadian. The amount of drilling and exploration and engineering work that we still have to do represents a lot less than has already been done. So we're on the downslope here. We know we have to raise significantly less than has already been raised in this company. So I think dilution will be fairly limited.
Well, that's fair. And those are great answers. Is it too early to entertain or explain the strategy about why you will or why you won't perhaps attract major or mid-tier JV partners to help you along? Someone like Rio Tinto, for instance.
That's a terrific question, Ellis. And at this point in the development of a prospect like Santo Tomas, you would expect business development departments of majors who are looking for copper assets, who are desperately looking for copper assets. The words copper and emergency are being put together by a lot of those companies and by a lot of analysts. So we know the majors are serious. We know that they've started to engage in mergers and acquisitions to consolidate the copper sector and buy assets. To date, they have not been buying greenfield assets like this. They've been buying existing producers or assets, like in the case of BHP's acquisition of Oz Minerals, assets that have potential synergies with assets they already own. The acquisition of greenfield projects that require additional work and permitting and construction and where cash flow is still several years away, has been somewhat slow, but As the chairman of Rio Tinto, Dominic Barton, recently put it, they're desperately seeking new copper assets, but shuffling of assets, existing assets between majors is not going to generate any new copper production, and the world desperately needs new copper production. And so they will be looking at the acquisition of the types of assets that Santo Tomas represents, which will produce additional copper, new copper, these sources of new copper production. We know that the majors have not been doing it to date. We know that they've been engaging in a lot of acquisitions and M&A in the copper sector. And we're all wondering at what point, what is the catalyst that's going to cause them to come and buy assets like Oroco and the other half dozen, 8, 10 similarly sized advanced assets in the world. One of the things that may drive acquisition of greenfield assets would be higher copper prices. I can understand why the majors might be cautious right now. Talk of a recession. There's a slowdown in China. Started a few years ago with COVID slowing things down. So there's lots of reasons to be cautious with shareholders' money if you're a major right now. But there's also a very well understood, very widely broadcast coming deficits in copper. We are going to start to use more copper, which has been a trend since 150 years ago. The world has been using more copper every year, every decade. But the rate of copper usage is going to increase above historical rates because of decarbonization, because of electrification. That's one of the most widely understood narratives in the commodity space right now. Except for a few handful of big mines being put into production over the next 2 years, which may leave the market in balance, even a slight surplus, it is widely understood that after that, copper usage and new copper mines are going to start to diverge, and we're going to see deficits. So I think it may take higher copper prices. It may take some of the things that are currently worrying economic analysts right now to turn around, but they will turn around, and we will get back to a narrative of growth. Copper prices will respond, and that, I think, is potentially one of the catalysts for M&A in the sector that Oroco is in.
I think the price of copper is a really strong place right now. It's not too far away from $4, and it's just the equities that are really, really suppressed and depressed, as many equities are right now. And this is the time that the smartest investors should pick a basket of companies right now, especially in the copper space, because even though China may be pulling back a little bit with regard to factory production and all of that, the electrification of the world does not stop. It does not stop in North America. In fact, it's mandated. It's a critical mineral in Canada and the U.S. now. That's copper. We need it in everything. The fact of the matter is that gold is upticking along with oil right now. And usually copper and gold don't move together, but I think they're going to move together now for reasons that we can't fully explain.
I would agree with that. I think the copper narrative is well understood. We're at a tipping point in terms of a number of technologies that are copper intensive. We know what's coming in terms of copper demand. And interestingly, we're also at a point where new copper resources, we stopped really developing and finding new copper resources over a decade ago. The rate of discovery of new copper resources has fallen off a cliff, and not because it's not being looked for. Exploration budgets are quite high, but we have done a very thorough job over the last 40 years of finding copper. So part of the copper deficits upcoming have to do with increased demand, and part of it has to do with decline in production and aging large copper mines, which are declining in grade and quality, and costs are increasing. So we understand what's happening, and I think you're right. Investors should be able to put two and two together and understand that forces that are not going to be in play long term are keeping copper prices relatively low. I'll say as $3.60 is not a bad price, but the writing's on the wall. Copper usage in China is actually holding steady or rising. Whatever is not being used in the property sector is being put to use and being consumed by the energy and renewable and decarbonization sector in China. So I recently saw a graph that showed a drop-off in copper usage in the housing sector and construction sector, almost completely taken up by increasing copper usage in the electrification sector. So we know what's coming. Big assets like Santo Tomas provide investors a ton of leverage, and I think the Cantor report explains exactly how that is. You mentioned Rio Tinto, big copper player. Teck is a big copper player. BHP is a big copper player. So there's many ways to play the copper sector. And right now, what we're seeing is value of junior companies with big assets like Santo Tomas. Those are probably the most beat up. So those offer the most leverage to copper. So I encourage people to study copper. Look at the recent article in the New York Times that talked about the electrification of U.S. industry and how it's coming faster than people realize. Understand that it's legislated. Decarbonization, electrification is legislated in all big economies. In the U.S., you've got the Inflation Reduction Act, you've got the Green Deal in Europe, and of course, China has 5-year plans that see it adding renewable energy, copper-intensive technologies at a rate faster than anybody else in the world. In fact, China adds more renewable energy capacity and generating capacity annually than the rest of the world combined. So the world's big economy is all lined up to do that. Copper usage in India ticked up 30% last year. So there's a sleeping giant. There's over 1 billion people that are going to start where wealth is being generated, standard of living is increasing, and they're entering a very, very copper-intensive phase of economic development. like China did 20 years ago. And we saw what that did for copper prices. So India is now awakening and its copper usage is rising at well above the world's average.
Adam, it's always great to catch up with you. If we didn't have these chats, I wouldn't get to see or talk with you, it seems. So I'm grateful for that. I encourage everybody to take a look at Oroco Resource Corporation, trading on the TSX Venture Exchange under the symbol OCO and in the U.S. under the symbol ORRCF. Thanks so much for joining me today, Adam.
Appreciate it, Ellis. Always a pleasure to talk. And we will be in the same room one day soon, I hope. I'll see you soon.
I've been speaking with Adam Smith, co-founder and vice president of business development for Oroco Resource Corp. Oroco trades on the TSX Venture Exchange under the symbol OCO and in the U.S. on the OTCQB market under the ticker symbol ORRCF. Go to the company's website, orocoresourcecorp.com. For Adam Smith and Oroco Resource Corp, I'm Ellis Martin.
Subscribe to the Ellis Martin newsletter. It's free. Go to ellismartinreport.com and fill out the quick and easy pop-up form.